Well, good afternoon, everybody, and welcome to today's panel on opportunities in the Australian mining equity space for 2025. I'm Dannika Warburton from Investability, an IR firm in Sydney, and delighted to be joined today by an esteemed panel of experts here. First, we have John Forwood, the Chief Investment Officer at Lowell Resources Funds Management. So John's background has been managing natural resources portfolios successfully over multiple different market cycles. Previously a lawyer and geologist by background. These days he's most known for identifying and investing in early stage mining projects, and have most of these have delivered some substantial returns, haven't they?
Some of them.
Next to John, we've got Namali, Mackay. I hope I've pronounced that right. Namali is the Managing Director of the Critical Minerals Association of Australia. She's a key advocate for sustainable mining with extensive experience in policy and partnerships, and this is really shaping the future of critical minerals. So we're very excited to hear your insights. And our third panellist here is Richard Shemesian. He's the Managing Director of private equity firm Bennelong Venture Capital. Richard has founded and directed several ASX-listed resources companies and has played a pivotal role advancing early-stage exploration companies into producers and takeover targets. So we might just start and kick into the questions. Firstly, John, I'm interested to hear your thoughts on where you saw the Australian mining equities market in 2024. What were sort of your key performers or, underperformers?
Look, I think we're sort of almost back to where we started in terms of the start of the year. We've had a couple of little runs in the market. The first that I noticed was back in April, May, when most of the metal complex, the base metals and the precious metals ran together just for 5 or 6 weeks or so, and that gave the market a good uptick. And I sort of put one of the reasons for that down to oil traders, the really big oil traders, getting back into the metals market. But unfortunately, that was fairly short-lived. The market came off again. And then we had another run in pre the US election in sort of September, October, with US cutting interest rates and China stimulus. And that gave the market a bit of a run. But unfortunately, the election happened and things pulled back again. So, but we're now maybe on a run back up into Christmas. But net, I don't think we've really come very far in terms of the market. I think this year has been a very tough year for transition metals. And obviously a much better year for precious metals. So gold and silver have been much better performers in our portfolio than the battery metal complex. Yeah.
And being in the sort of critical mineral space, John mentioned that maybe the sector's underperformed expectations this year. Where do you see the industry evolving for 2025?
Well, this is the $1 million question. I wish I could answer it. But yeah, exactly. As John said, it's been a very challenging year for the critical minerals industry and all of the minerals and metals that go with that. You've seen pricing being a major issue, as well as, a lot of shutdowns. And so, at the risk of being very pessimistic, for our industry, it just feels like we're still struggling with financing some of the junior end and getting some of those resources off, out of the ground. So we remain hopeful that government will step in a more structured way to encourage a lot more of the private investment into this area. That's where there are some real bottlenecks. So I'm not really answering your question, but there are significantly more challenges at the moment than there are lights at the end of the tunnel. Yeah.
And Richard, we saw on a few days ago that Australia's largest listed gold company, Northern Star, take over De Grey. Where do you think, in terms of the market cycle, we're sitting?
That's a very good question, and I think John may have different. Everyone's got different views of this commodity cycle, but some people say that we've had that the big crash or the downward cycle 1 or 2 years ago, but we saw that with lithium as well. Lithium sort of had a boom year last year, but we had the tail end of that. That's gone down. This year it's been gold, so gold's been booming. So I think John was saying before to me there's sub-cycles within this cycle, but I think there's cash takeovers and bids that on the cycle. If you've got 12 o'clock is a crash, then you've got declining exploration, times are bad, blah, blah, blah. Now we're starting to see mergers and acquisitions happening. It could be at 5 a.m., and when you get to 6, you're starting to get boom, but we need a trigger to get that boom going. So I think we're not far away from some sort of an uplift, but we need some sort of a trigger to push it up. It might be, again, gold prices or critical metal prices moving up. It could be one geopolitical event that changes that and we get that run up. So it might not be far away. It might be an hour away for exciting times ahead. I don't know.
Something I've noticed, just if you compare the number of IPOs this year to last year on the ASX in terms of resources, there's been maybe 10. 2023 there was almost none. So there's been a little uptick in IPOs, but certainly this year I can count a huge number more of share consolidations than IPOs. So I think that sort of indicates we're still, in a very tough market.
And I guess to follow up on that, the capital hurdle for juniors, John, it's been pretty hard for management teams year on year. How should these junior miners approach this issue going forward, do you think?
Yeah, I think that is a real contributing factor to why junior miners are pretty undervalued, in my view, at the moment. Is the market can see that they've perhaps, we've got a project with a big capital hurdle, and it's very difficult for a $20 million market cap company to raise $200 million of capex, and it's almost a self-fulfilling prophecy. If the market doesn't think you can do it, then your share price will go down. You've got less chance of doing it. So one thing that we, one of the investment theses that we are pursuing is looking at projects that have a dual potential outcome. Hopefully, these projects might get the critical mass to become standalone projects, but they're also in areas where there's enough infrastructure and enough processing capacity that if they don't get that critical mass, they can have a very low capital solution of truck and toll treat. And the WA Goldfields is a very good example of that. So we've pursued a number of opportunities which we think have got that sort of potential.
And Namali, with your role as the head of the Critical Minerals Association, which is positioning, I guess one of its objectives is to position Australia as an attractive jurisdiction for a mining investment.
Yeah, absolutely. Perhaps
you could give a couple of examples or one example of some of the things that your association does.
Yeah, sure. So, I mean, one of the things we're working on at the moment is some of you might be aware the government's put forward a critical minerals production tax incentive, which is designed to sort of boost the midstream. So effectively, the policy position is that rather than just the dig and ship, we're trying to get into more of the value add and encourage industry to go into the value add. And this mechanism, this tax incentive, is designed to boost some of that midstream processing. So one of the things that we're actively working with government and industry on is really trying to make sure we get the design of that right, because we have concerns that this might, it's sort of a cut and paste from the US IRA model of the tax incentive there, but we're concerned that the problem for Australia is that we don't have a downstream demand. We are still struggling at the upstream end on the critical minerals side, and so we don't want to incentivize the wrong investors in accessing that tax incentive. So that's just one example of something that we're really quite focused on in terms of getting the money flowing correctly.
Dannika, if I could just ask a question, Namali, the problem I think, John, we face as the exploration investors is where's the incentives by the government to help that? The explorers, we've got a resource, but we need a bit more funding. Is there facilities now available in Australia, or are we always going to be tapping the equity markets, or a Rio who's going to, take all the project off your hands and there's no upside?
This is such a good question, and it's something I don't want to use the word lobby, but we are actively advocating for. Like, you're absolutely right. Like, to some extent, why are we focused on the midstream at this point when we have some serious issues in the upstream with the juniors in the critical minerals environment? So the government has got a number of programs, I guess, and grants, not much equity, a lot of debt funding options for the juniors in the upstream, and not all of them can access it. But the problem is that this is, we all know this is not a level playing field for these juniors trying to get into this space. It's a highly unlevel playing field. So we think government really needs to be a lot more creative and a lot more interventionist in finding ways to prop up that end of the supply chain to get it moving fast, because we're in a race against time. So, yeah, I agree with you.
I think there are, on the state government level, and it's not just in Australia, but state governments, I think all of them have drilling grants, which are generally dollar for dollar. And some of them go further than that. Some of them had geophysics grants for geophysics. Some even have, like WA has a grant for heritage surveys, because heritage has got so much of a cost. Tasmania has a helicopter fund that can use. I'm not sure if the Premier has a helicopter company, but you can access that. And other sort of maybe more, less standard or more innovative solutions. There is quite a bit of drill for equity going on. So drilling companies who have, the ones that have been profitable, going or participating in the drilling risk by saying we'll take 30, 40, 50% of our drilling fees in equity, in shares. So there are a few ways around it, but at the end of the day, the exploration company still has to come up with hard dollars. Yep.
I think that's a good point. We just had one company do $1 million in drilling equity. Our investors put $2.3 million in and got $140,000 from the government to drill a couple of holes for copper. So I think that's a good point, John. And there is that funding available. It's sort of like a package or a sort of a couple of stages of funding that's available. So, yeah, I think I didn't realise that is a funding option in Australia. A lot of drillers will do the work for equity. So that's like a cash injection.
And they're the ones who see the rocks coming out of the ground first.
Yeah, and I guess the thing to keep in mind is that Australia's competing against very different levels of government support in countries like Canada, the US, and China. Those, and that's what we're up against. So it's a lot more. It's a lot easier to get up and running. Not necessarily easy, full stop, but yeah. So there's some really big considerations there.
And I guess moving to the outlook for next year, Richard, what are your sort of top picks in terms of commodities or even subsectors that you're liking?
I'm going to be an investor in John's fund because he's doing very well. Precious metals, I think, is a no-brainer. Obviously, John's in that gold and precious metals, but sometimes you've got to be a bit of contrarian investor. Look, critical metals, again, I think John was saying about subsets. You can't just say all critical metals is in the toilet, right? Like lithium at the moment. What about zinc? When Trafigura has a contract and it can't deliver into the warehouse or some sort of news like that, zinc then goes for a run, or copper might go for a run. The other day we saw G7 may sanction Russian palladium. Now, palladium went for a run. Palladium is down this year. So we're looking at, we've got palladium projects, we've got exposure to silver. We think copper, because copper's required for a lot of our defence uses and a lot of the EV. Also zinc as well, which is on the critical metals list in the US, but not necessarily on the Australian one. So I think it's those down and out ones that you can pick some good ones. But I think gold and silver, especially with the geopolitical issues. South Korea the other day had a martial law. I mean, these are stuff where people are going to run to. So I think gold and silver definitely with the geopolitical risks.
I was just going to add, so from a critical minerals point of view, while, there is a depressed kind of outlook where you have, let's say, for example, a critical mineral attached to a base metal, like, gold and antimony, just as an example, it's probably going to be easier than a critical metal on its own. And also on your geopolitics point, China obviously put those bans in place this week for antimony, germanium, gallium. Maybe there's an opportunity for us there if the US needs to source antimony and some of those. It's all very volatile.
Yeah, just those three metals that you talked about there that China's just, put a US ban on. I think you can, just dig down a bit more granularity there. I like gallium because, it doesn't have to go into China to be processed. Generally, I understand it goes with zinc cons, and you can process zinc outside of China. Whereas, say, antimony, the price has skyrocketed, but you do have to, the only processing option for an antimony con is in China. So I think, gallium and germanium, pretty interesting, very niche, but pretty interesting. The other one, I just went to visit EQ Resources' Tungsten mine in northern Spain. And those guys, they're hitting production records, doing really well operationally, and they're saying the traders and the off-takers are begging them for more supply. They can't meet it. They said, just give us anything that's lying around on the floor in the processing plant. Off-spec, doesn't matter. So I think going into 2025, tungsten, and there's a lot of really interesting drivers for tungsten, that's one that looks quite positive.
I think there's already signals out there on these. The US and the Chinese you can already see where they're going. Like, we were in rare earths before. Yeah, rare earths is critical, but it's hard. We've seen how many disasters in Australia was involved with one that went to a $500 million market cap. Twiggy Forrest came in, but it's $1 billion capex. So, if you're going to get involved in these critical metals areas, I think you got to get in and get out. So you have to be a short-term view. The other one is graphite. I mean, you can see where they're coming. The signal's already there. They're saying palladium. We don't want people buying palladium from the Russians. What about nickel? Nobody loves nickel today. So, could we see a spike in nickel? We just, there's so many things that are happening out there that we can't predict next year what it is, but you can see that they could happen, and then they'll go for a spike and everyone's going to jump on that bandwagon. It's interesting times, but I think that geopolitical, the signals are already coming out there to don't buy these particular metals, or we're going to put a halt on the sales. So you can actually start to see where things are heading.
And normally within the space or the context of sort of sustainability and the critical minerals industry, what sort of advancements or other sort of key drivers do you think we're going to see next year?
So this is just an incredibly complex space, the ESG dimension, and actually I don't know what both of you think about it, but the north, like the northern hemisphere, is supposedly driving some of that consumer need for ESG credentials and traceability and all of that. It's not materialized in terms of cost, so it really is going to be something that even junior miners have to just accept as a business as usual cost, and it will probably pay dividends in the long run, but I think we have to be careful that it doesn't become an overbearing cost. There's now this, I was sitting in on the panel yesterday where there's a move to consolidate all of the ESG standards into one standard, and potentially that's a good thing, because it can be quite onerous, and there are technological advances, but this is such a complex area, and pricing it in is very, very tough.
Yeah. John, what influence do sustainability, and credentials and that sort of thing, do they have any bearing on your portfolio decisions?
Yeah, look, definitely. you've got to, just from a pure economic point of view, it's very important, as we saw with the notorious McPhillamys decision in New South Wales just recently. If you can't be confident that you're going to be able to tick all the ESG boxes, then you risk running into a real brick wall. So while as Molly said, the end users are not paying extra for green metal, if you like, in general. That if you don't have those credentials, then you won't have any metal at all.
I'd just like to add on that. Are we going to see a shift now away from ESG now that, unfortunately, you got Donald Trump in, and I had a stock was Trilogy in Alaska, and ESG prevented that project from going forward. And as soon as Trump got in, he said, no, we're going to approve that road and go through all that environmental issues, and the stock went up 3 times. So are we going to start seeing we've got to wind back some of these ESG credentials? It's very important, but we're competing with China and Africa, and I don't know what the Russians are doing down there as well, but where are their ESGs? They're just building and then taking things out. So is there going to be a change where the US are going to relax those ESGs and the rest of us have to look at that? If you want to develop, we've got to relax some of these ESG things. It's too hard otherwise for a junior company to get through those hurdles.
Yeah, it's interesting to see a number of the Republican states actually suing Blackrock for hampering some of their investee companies by requiring them to jump through ESG hoops, particularly obviously in fossil fuels. But I think it's a many-layered permitting process in the US in particular. Trump can do one thing, but mining has a very local impact, and it is always going to come down to the people on the ground, the local county, the state, and if they don't like it, they can. And then Indigenous groups, if they don't like it, they can certainly block it.
And also, I think consumers. There is a shift in consumer expectation. It's not quite translating yet, but it is very strong and it is there. So, how that feeds into the supply chain will be interesting in the context of this change of political environment that you're talking about. But I think it's essential. And why are we doing it? Are we doing it to tick the boxes, or are we actually, we have a serious problem that we've got to address on our hands?
I wonder if China has an ESG policy in their production of metals and rare earths. That's what we're competing with. That's my concern. I'm sure there is some good ESG in China, but when we were doing rare earths, mate, they were just dumping all that acid down the river, and it's like, well, how do you compete with that? I think that's the difficulty. So you've got 2 different worlds that you're working in.
Absolutely.
You've got to have that much a better project, better grade, better metallurgy, to really compete.
I wanted to throw it to the audience to see if there was any questions that you might have. I'll come over to you.
Yeah, I'd just like to pick up on that point you're just talking about ESG. And I'm a mining investor. I invest in mining companies all over the world, often sort of late stage exploration, sort of early development stage. And the ASX is my favorite market. Because of the amount of liquidity there is on the ASX and the amount of knowledge there is on ASX investors, including retail investors. But the biggest problem I have is the process that juniors go through, having made a discovery hole, to taking that forward into funding. And the biggest hold-ups are with traditional owner issues and environmental issues. And of course, we're all concerned about those issues in a general sense, but it's a question of degree. And, when I look at the details and I talk to the managers of some of these companies and the problems they go through, with traditional owners and people trying to make money out of, ever more lengthy surveys and going into kind of almost ridiculous details on some of the flora and fauna issues, that's the thing that puts me off about the ASX the most. And the ASX is my favourite market. I think, I'm sort of guessing that part of the problem is that there's a bit of an industry now amongst environmentalists and environmental scientists and traditional owner companies that they actually make quite a lot of money out of elongating the approval processes for these projects. And I just wonder if you had any kind of thoughts around that.
I'm not sure about that so much as it falls sort of within, I think, correct me if I'm wrong, the government structure that's built around that. So there's almost, and you might have a different view, there's a bit of that, but also the requirement to comply. And I agree, like it can be quite onerous, but it could be managed better. And this is, part of this long process that companies have to go through in order to access someone like you needs to be streamlined in some way. And quick, yeah. And then I think that, no, it doesn't. And that's where absolutely.
But if I could jump in there, I 100% agree with you. I mean, we've been exploring the Pilbara for 40 years where you could just bring a rig before and drill. Now you need approvals. But let me tell you, where we are in the Pilbara, like De Grey and Artemis, don't worry about that. Your share price going from 5 cents to $2 on the back of a 12 million ounce discovery in a tier 1 jurisdiction, which the majors want. They're not going to go to Mali. They're going to go to Western Australia. It's tier 1. You've got mining infrastructure, you've got the mining people, and you get 10 baggers, and I'm sure John's done, in Australia. But in Africa, the problem you're going to have there is, you're going to have your lithium deposit taken away by the Zimbabwean or the Chinese group. So it's quid pro quo. But I think Western Australia's delivered already probably 10 baggers in the last two years. I mean, maybe John knows more than I. So as an investor, maybe you don't want to be hanging around for the end of the mine. You don't have to. Azure got taken over in 18 months from 20 million to 3 billion.
Without a resource.
Without a resource. You're out by then.
Yeah, what's the role of AI technology into the junior mining space? There's some of company adopting AI technology to analyzing their data to finding a target. So what do you think that will help to the junior mining space?
In terms of exploration, I know there's quite a bit of work going on there, and Bill Gates and Bezos are involved in AI exploration companies. There's a number in Australia as well. Look, I'm not aware of any major discoveries that have been made just using AI. It might have helped. And one thing that these data processing AI technologies need is lots of data. So they tend to focus on areas that have already had a lot of drilling, a lot of geophysics, a lot of sampling, etc. So it's almost, okay, we're going to find something where other things have been found already. So I think it's hard for AI to generate targets in frontier fields where you find things like the De Grey, the 12 million ounces that no one ever thought would be there. So it definitely has a role to play, but we're yet to see a major breakthrough using it.
I'll just jump in there. Our guys just got a new software. I don't want to promote the name of it, but they use the AI to do the modelling. It had a resource, but they thought it was small. The resource is now 10 times the size because the AI calculated it faster and quicker. So that's what it's helping. But as that Apple guy does say on Bloomberg, he has got AI. He says it's called actual intelligence. And that actual intelligence has discovered the Hemis, the Azures lithium, and hopefully our little company Artemis next to De Grey. We're using actual intelligence with the AI modelling. So I don't think it's there yet where AI is going to say drill here, but you use that tool to confirm the area. Still need that, and I think that's where Western Australia and Australia's got this great advantage, that the technical abilities to make discoveries. I don't know, John, I mean, we're finding discoveries, 4 or 5 discoveries in the last 4 years, massive ones. So I think it plays a part, but you still need the people, I think.
Okay, well, we might finish up with a round of rapid-fire questions. So we'll go sort of from John down to Richard. What's one commodity you're most bullish on in 2025 and why?
Look, I've already mentioned tungsten, but I think another one that we're looking hard at is silver. And that, if it does move from trading on a more industrial metal basis to trading on more a bullion basis, you could see the ratio, gold-silver ratio, go from 80 to 1 to 35 to 1. And if that happened, you'd be at $100 silver.
Namali?
This is not something I really can comment on, so I'm going to pass. Yeah, yeah, absolutely.
I think John stole my point there, but we have that silver project which we talked about, and that silver ratio, Peter Kruth from the silver guy in Zurich, you may have met him. He thinks the ratio can go down as 15 to 1. I mean, that's unbelievable. That's like $400 or $500 an ounce. Maybe not that high, but maybe 30 to 50. Maybe that ratio changes. Silver guys are there. There's a lot of silver bugs out there. So I like silver, but also PGMs as a counter-cyclical, because we don't know when this ban's going to come in, but they've already said no more palladium. You guys are not going to buy palladium from Russia. So there could be a palladium PGM thing as well. So I think just keep an eye on where China and US are going to have these retaliatory trade sort of embargoes and tariffs, and which ones are those going to be affected. The other one that's a sleeper is zinc. No one's really talking about zinc, but zinc's actually performing better than copper, and the Americans have got that on the critical metals list. So keep an eye on zinc and any spikes in those LME metals, which could happen.
And you often get zinc with silver.
Okay, and ESG, growth driver or challenge for mining companies?
I think it's definitely, more in the challenge basket. As alluded to, 22 odd years average to at least to bring a new mine into production in the Western world. It's a massive challenge.
I don't know if I'm going to want to pay for it, but
Challenge. Just also because we haven't nailed the way we define, the way we, categorize what's green, what's not. Can't even agree on a common standard. That all adds to the challenge of it, but not to undermine the fact that it is a necessity.
Challenge, as a friend of mine, Robert Freeland, says, sure, get the ESG, but then you have to put a tax on the other guys who are not got ESG, or pay a premium for your green copper. It's not happening. So Robert's a very smart guy, but that's the only way. It's got to be an equal playing field, so it's a challenge.
All right, and one Aussie mining company that you're watching closely in 2025, if you want to plug one.
That's very tough. But look, one of our larger investments is Predictive Discovery in Guinea in West Africa. We see a real catalyst there if and when, hopefully when, they get their mining concession granted. We could see that go into an M&A play. We've already seen Perseus take 19%, and it could become an active M&A target once the mining concession's granted.
Passing that way too.
Richard?
Couldn't possibly pick.
I like the Pilbara. I love the Pilbara. De Grey was amazing. That's gone. So the next cab off the rank in that North Pilbara Craton is Artemis. We've got a big position in Artemis. And I think there's more to be found. I think, like I said, 1 billion plus discoveries in that little Pilbara Craton. There's more to come. It's not just Rio Tinto and BHP up there. There's gold, silver, PGM. So Artemis at 1 cent. Hopefully I'll be back here next year going, great prediction.
And given the theme of this chat, which we'll wrap up in a second, in one sentence, what's your how would you describe the outlook for Australian mining equities over the next few years?
Look, we very much focus on the juniors, and we've seen the juniors really underperform the cash flowing companies. So look, maybe it's optimistic, but I would hope to see the juniors try and make up some of that ground and get some revaluation into the micro and nano end. That'll be very much one of the big factors there is interest rates, more speculative money, more risk-tolerant money. If we do see interest rates keep on coming off, then we should see some better appetite for high-risk investing.
Very similar point in that, during this, where are we in the cycle? Richard, you're saying we're nearly on the move to the up. And I think this has been a period where a lot of the juniors, not a lot, some actually, only some, have used this time to like bring themselves up to commercialization or near commercialization. So I remain optimistic that there can be some light at the end of this tunnel.
I think as we discussed before, I think there's those little mini booms. Like we were down in the dumps last year, and then we had a lithium discovery. I mean, there was a boom in lithium in Australia last year. This year it's probably gold. So I think the beauty for Australia is that whatever commodity gets sanctioned or spikes, Australia will move quickly on that in that area. So I think I think the outlook's pretty good for Australia. We're in the Mineral Securities Partnership with the UK and the US. Let's hope we could do a bit of friendshoring with Donald Trump. I'm hoping to go to Washington next year to see what the US can do. There is money coming from the US. So I think Australia as a secure, friendly Western nation is going to play a really important part, because you can go to Africa as much as you want, but if you're not in that libido corridor that they've got in all those safe countries, then, good luck. I mean, good luck trying to go to Western Africa at the moment in some parts. So I think Australia's going to be really a focus for the majors. So find something and they will come and buy you out, which is what's happening.
Well, thank you, John, Namali and Richard, for your valuable insights. It's been so wonderful to hear from you all, and I encourage the audience to reach out or, come and say hello after this chat, or reach out via LinkedIn or the websites. And I hope you enjoy the rest of the conference.
Thanks, everybody.
Thanks, Dannika.
Thank you.
Thanks, everyone.
Thanks, Dannika.